For TraderInsight.com, I'm Adrian Manns. Let's have a look at what happened in the first hour trading pit on August the 6th, 2018. Well, it was a Monday, and Mondays are rapidly becoming everybody's favorite day of the week, especially during the summer, as this is the most predictable volatility that we feel we're getting in front of. This morning, we had Dish Network Corporation, ticker symbol DISH. You can see here I had a 33.40 stop, and that initially was placed right here because of all this supporting range going into the close. $34.32 was my entry criteria on the trade, and that gave me a target roughly up at the R1 pivot. Once we had the entry in place, this one was pretty much a no-brainer. It went up, it got almost all the way to the target. We at least made it 50% of the distance to the target, and at that point, we took this stop-loss line and moved it up and got it just under that prior session's closing range. That was where I felt that if we came back in and had a test and moved back down into these highs, that we had a very high likelihood that we would come down and wind up with a reversal back into the range. None of that was an issue. The stock made the move back up to the target after this little reversal, and we had a nice discussion about this one live in the first hour trading pit this morning. So if you're not taking part in those conversations, come on in. It's included in your subscription, and I guarantee you it's going to do you a whole lot of good. Next on the list, Shutterstock Incorporated, SSTK. I'm sure you noticed last night on the trading plan for the Fastball XRV that I have started including which exchange the stock trades on. So that didn't stop some of you from focusing on the wrong things this morning. Shame on you. But this is an NYSE listed security, and it's going to tend towards having an open that looks very different than those NASDAQ securities. This one opened on soft volume, but no softer than the volume that occurs any other trading period during the day on a typical day. And we really saw the specialist go to work on this one in the second bar of trading. So we had an entry that was actually down here on top of yesterday's range. So $50.60 all the way up to about $50.80 really was acceptable as far as I was concerned on this one. And in the first bar of trading, the NYSE specialist was not very busily minding this book, so it was very easy to get the fill right between $50.60 and actually $50.63. The stock on this initially down at $49.43, but with all the NYSE stocks, it's the same. We want to see where they open, where the designated market maker makes the market on the stock right out of the opening gate, and then see where the support is on the book. So as you're looking at that level 2 screen on this, it's very easy to see that in fact you can move that stop up to $50.14 right out of the gate, and this one winds up being a beautiful trade, $50.60 straight up to the $1 target or the pivot, whichever you're using here, $51.70. Then the stock consolidates all the way up to $52.86. Low liquidity NYSE stocks tend to make very big moves on the Fastball XRV setups. Next on the list, we had TNDM, Tandem Diabetes Care Incorporated. If you were going through and cherry-picking trades on this one, you would have thought this was absolutely the trade to get into. That's just because of the way the trend looked on a daily chart and the fact that the sector's pretty hot. In this case, 33.45 was the go line on the stock. I got traded into this right off the opening bell. It came down, made it almost all the way down to my $32.20 stop loss. This would have been a big stop, and it would have been very easy to say anywhere along the way here, I'm going to cut this one loose because I don't want any more pain. But look what happened. The reason we had the stop down here was it had to get under all this range and under all this volume. By leaving the stop in place and allowing the trade to play out over the course of the morning, what we wound up with here wasn't so bad at all. The stock made it up at least 50% of the distance to the profit objective, right here at about $33.90. After that, it turned around, and once we got 50% of the distance to the target, my practice is always, and has always been, to move a stop up to a place that makes more sense. So around $33 and actually 37 cents was where I called it in the room this morning, was the reversal out on this one. It was an 8-cent per share loss. Sure, it would have been nice if this one got up to the profit objective, but that just wasn't in the cards for this one. And by sticking to the trading plan and sticking to the discipline, what we wound up with here was basically a break-even stop. That allowed us to keep our powder dry and keep the profits booked on the rest of these trades for the rest of the morning. Next up, Tesoro Incorporated, ticker symbol TSRO. Take a look at what happened here. Our go line on this one, right below the low price from the Friday session, so about $26.73. Actually, that should be up about a penny there. So from that $26.73 low on Friday, what we were looking for was a move down to about $25.73. The stop on this one was pretty tight right out of the gate, $27.67. You can see here that when price came up and tested that level, that's when it wound up making a break to the upside. But in any case, that was not a concern for us this morning. The stock opened $26.72. You saw in the room, a bunch of us got triggered into these. $26.72. Took a shot straight down to that profit objective. This was a quick trade, in and out for $1 per share on TSRO. Ultragenyx Pharmaceuticals Incorporated, ticker symbol RARE. Here's another one I heard a bunch of grumbling about over the weekend. I don't know where that fits into anybody's trading plan, but your psychology might be a little bit different than mine. This one had a 70.91 entry. My stop was all the way up at $72.60. I know some of you had stops that were even wider than that initially on this one. In the end, the proof is really in the pudding, and the trajectory on these tends to be in the direction that they closed the prior session. As long as we get sellers coming in, our first objective is to find a place to move that stop loss once we get 50% of the distance to the target anyways. So this line here really only comes into play in the first few minutes of trading most days anyways. So in my case, this $72.60 stop loss was moved down right about on top of these guys right here. This bar that took off, the second bar of trading that got us in. Reality is it's better to put it right up above that closing range from the prior session, or that closing trade from the prior session, $71.91. Why wasn't my stop way up above these highs? Well, because as I saw it, if we got up above that initial stop loss level and started making a move higher into this range, we're going to be invalidating a lot of the final push in the Friday session. We had descending highs as we were coming into the close, and it all made sense to say, if we violate the range and start moving back up into here, looks to me like we undid a bunch of volume and are going to wind up traveling probably all the way up to the central pivot. That's what this thing did over the course of the session. In our case, given that we had a $1 target on this trade, and the low for the day was $69.73, which was only 18 cents beyond that $1 target. It's a good example of what my thinking is when I put these trades together and when I carry them out. Finally, as if we didn't have enough on our plate, along comes my buddy Rick Kipp, tells us that Sotheby's, ticker symbol BID, has scanned to the top of my Baltimore Chop scanner. That's a proprietary scanner that the boot camp guys get and can use with TradeStation if they're using TradeStation. This was a textbook entry. We had this first bar of trading made a move lower. Second bar had a lower high than the first bar. That gave us an entry criteria right around $48.31. And in this case, that high of the first bar of trading gave us a target at $49 even. Once it got to that target, you heard Rick talking about he's going to look for an extension move on this trade. And the way that you figure out what that extension is going to be is you take either the range of this first bar, or you can take the range of the low to the high between the two bars that got you into this trade. So the first bar was the Baltimore Chop indication. The second bar was the one that actually triggered you. So peak to trough, and a 150% extension in this case, $49.83. I think Rick got out somewhere around $49.60. I think he used the first bar to map out that Fibonacci expansion. But nice job on this one, and hopefully we're going to see lots more like it over the rest of the week. So again, remember, summertime trading tends to be slow. Mondays tend to be the go day in July and August. That just has to do with where the volatility is going to be. Rest of the week might settle in, but in any case, let's keep our eyes on the ball, plan our trades, trade our plans, and look here for the review of what happened every day. So if you have any questions, shoot me an email, adrian@traderinsight.com. I hope you had a great trading day today and an even better one on deck for tomorrow. It's the best trader education anywhere, only from traderinsight.com.